Hi everyone, welcome back to Be Rich. It's me here recording remotely with Shashwat, and we thought we'd get a video out today about IndusInd Bank and what's been happening in the market, and if you should be nervous if you own IndusInd stock, or if you are someone who's been waiting to buy IndusInd, if it's something right away you should consider. All this will be explained by end of the video, should be crystal clear. So without wasting any further time, I'll have Shashwat walk us through what's happening in IndusInd.
Yeah. So thanks for having me back on. So what's been going on with IndusInd? That's the question. Because let's look at the stock performance. I'm sure our editor Rupesh will put it on the screen. But over the past 5 days, the stock price of IndusInd has gone down by 21.94% at the time of recording this video. That's a one-fifth drop in the price of the stock in a matter of a week, which is a crazy, crazy number, which we haven't quite seen in a long time. But I want the viewers to recall that during COVID, IndusInd also went down below book value and it shot back up to about 1,200, 300 bucks. So stranger things have happened. So now this is the picture. And now let's look at what's going on with IndusInd. Well, the reason IndusInd stock has been dumped in this way is because a lot of people see risk associated with owning IndusInd. And I repeat, risk in the sense that they are looking at short term risk for their earning potential. This isn't risk that is long term, or this isn't risk that is fundamentally threatening IndusInd Bank per se. This is a risk that IndusInd Bank will continue underperforming its peers. So, this is the risk we're talking about. If you look at the image on screen, you can see that profit after tax for IndusInd has gone down from quarter 2 of FY24. It has gone down from 2,202 crores to 1,331 crores. This is a 40% drop year over year. If you look at a quarter over quarter analysis, you can again see on the screen that quarter 1 of FY25, that is the previous quarter, their profit after tax or PAT was 2,171 crores, and this went down to 1,331 crores in the second quarter, that is the one we're in right now. That's a 39% drop. Okay, this is fine and dandy, Sashwat, but where is this drop coming from? Is there expenses going up or is there income coming down? Well, if you look at the same image, you can clearly see that net interest income has remained quite stable and even increased from quarter 2 of FY24 to quarter 2 of FY25. So, year over year, there's been a 5% increase in net income, and total income has increased by 2% year over year. However, operating expenses have also risen 14% year over year. On top of this, provisions and contingencies has grown from 974 crores to 1820 crores. This is the biggest hit to their bottom line so far. Okay, a lot of you must be panicking right now. But let's first understand where this is coming from. You have to understand that IndusInd is facing a tough situation, as every other company, financial company, is facing a tough situation because India's bottom class is hurting. So if you look at the microfinance segment, not just IndusInd, we looked at Spandana Sfurti, we looked at Manappuram, all these companies are hurting because microfinance is in very murky waters right now. So the reason why provisions and contingencies has gone up from 974 crores in quarter 2 of FY24, that is last year, to 1820 crores this year is because they are trying to create a buffer. For example, let's say you are running a household, as many of you are. Suppose you expect that in the next year there are going to be a lot of costs. Let's say your children have to have their school fees paid. Suppose there's going to be a new car which you're supposed to buy 2 years down the line. You'll start saving up little by little by now. Or let's say, suppose you know that 2 months later you have to pay for your, let's say, parents' medical fees. You know that these expenses might be coming. You don't know exactly if it's going to come 2 months later or 3 months later, but you know it's coming. So when you have such expenses on the horizon, you have to take some money from today. That is, you have to let go of today's enjoyment and you have to plan for the future. This is what any good company does, and especially if you're a bank, this is something you have to do. So IndusInd Bank has gone a step further and taken 1820 crores in provisions and contingencies. Now, our editor will play a clip which is an earnings call, the earnings call of this quarter, where the person in charge of running IndusInd is telling us why he has taken the buffer clearly. And if you look at what he's saying,
And this entire contingency buffer, how should we read this? Is it towards maybe any particular segment? It seems stress in the other retail is relatively on the higher side. Is it towards ECL, which we have been highlighting? So how should we root this buffer? Because I think maybe earlier you have been highlighting that maybe if profitability is there, then we would use it. Yeah.
No. I don't want to use the contingent buffer. I think this is a prudent measure which has been created to take care of any eventuality, whether it's CCL or whether if we see the credit cost rising at a certain point much below what our expectation is. But today, I don't think there is any need to use the contingent buffer. We just created it and set it aside.
No, reason for creating it this quarter. Yeah.
The only rationale for creating of this quarter was that I think we believe that the stress in the operating environment is building up. We saw some increase in the gross flows, and we said might as well take the contingency buffer right now. So it's only fortification of the balance sheet as of now.
Okay.
so from the earnings call, you can clearly see that he says this is a contingency or a buffer to make sure that if something comes in the future, then we will be prepared to deal with it. If microfinance deteriorates in the future, we will be prepared to take on that cost. Or if tomorrow borrowing costs rise, then we will be happy to take on that cost through this buffer. Okay, now we've understood where this buffer is coming into. So it's not a bad sign. Having a buffer is a good thing. Now, if you look at their operating profit, it has gone down by 8% year over year from quarter 2 of FY24 to quarter 2 of FY25. This, of course, is because of their rising costs. They're having a lot of stiff competition with their rivals. This is something which is inevitable, and also they've done a lot of write offs. So, if you look at their loan segment, before we get into that, I want to hear your thoughts on what we've discussed so far.
What you're saying is spot on. I agree with everything what you've said. And as a value investor, I have not seen anything will make me extremely worried, especially if I'm planning to buy this and hold on to it for 10 odd years. I don't see anything to worry about so far. So carry on.
Right. So now let's move on to the NPA composition of IndusInd. I know a lot of you are worried about NPAs, and I know a lot of you are going to write comments asking, Sashwat, all this is good, but what about the NPAs of IndusInd? So if you look at the NPAs of IndusInd, our brilliant editor has put up another image for us. You can clearly see that the NPAs in this quarter has mainly come from the consumer segment. So the corporate segment has given us 118 crores in fresh additions to NPA, and consumer segment has given us 1680 crores in NPAs in this quarter in fresh additions. If you look at last quarter, the trend has remained the same. Yes, the NPA count has gone up a little bit. We will soon explore where this increase has come from, but keep in mind that most of this is from consumer driven NPAs. And if you look at the percentage of gross NPA and percentage of net NPA, however, it has remained relatively stable, only going up to 2.11% from 2.02% in percentage gross NPA. And in percentage of net NPA, it has only gone from zero point 0.6 to 0.64. The provision coverage ratio, which is basically how much of this NPA is covered through provisions, is 70%, which is pretty robust. So we've looked at the NPA number. Let's see where this NPA is coming from. The NPA is coming from, as you can see on the screen right now, it's coming mainly from microfinance. Microfinance non-performing assets have gone up. This is in line with what we've been talking about from before. What percentage of IndusInd Bank's loan book is in microfinance? Well, I'm glad you asked. It's 9% of the loan book. A measly 9% of the loan book is causing a lot of people to panic. Yes, there have been other segments where NPAs have gone up, especially in the vehicular finance. If you look at vehicle finance, that's 25% of the business. But the main point that I'm trying to drive home here is that we already knew that vehicle finance and microfinance were very two risky segments of the lending business. These are considered the riskiest segments of formal lending. So if you have microfinance as well as vehicle finance in your loan book, you better expect some rockiness to go on when you are engaging in that business. Today, a lot of people had jubilant expectations of IndusInd making wonderful strides and making huge increase in net profits, but it's clear that their expectations were not realized, and we see that this quarter's performance has led to a lot of people being very pessimistic about what's going on with IndusInd, especially in terms of its jarring number of, let's say, 40% decline in its profit after tax, which, all things said, does seem quite jarring. But if you take a closer look, the fundamentals of the company doesn't seem to have changed much. Yes, earnings have gone down, but I don't see a world in which IndusInd's existence is threatened by this one quarter alone. There may be a lot of pain in the future, and from the earnings call as well, we can tell that he does foresee a lot of pain, but nothing in the earnings call tells me that I should be worried. And one last point which I want to make before we open this up for discussion is that the capital adequacy ratio of IndusInd is well above what the RBI dictates. They have a total capital adequacy ratio of 16.15% and a capital risk adjusted adequacy ratio of 17.55%. These are robust numbers, well above the RBI guidelines, and I don't see a world in which this is going to be a problem. Even their liquidity ratio is quite decent. And this image is now on screen for you to check as well. So, all this being said, what do you think about what's going on with IndusInd? How much pain do you think there is going to be in the future?
Well, this is a very short-term thing, right? First of all, the management is very transparent, which is what I like in a bank when they're very clear and they're very open and they tell you what's happening. And they have gone ahead and factored in pain which might come. We do not know if it is going to come for sure in this magnitude, but just to be sure, they factored it in and they position themselves for that pain if it does land. And they're very transparent in all their NPAs and whatever is happening in their books. Yes. So this is a very short-term thing. There's great potential for recovery, right? The deposits have grown, the loan has grown. So these two things also are very positive for a bank because a bank's fundamental way to make money is deposit growth and loan growth, right? And this microfinance, yes, it's a very stressed asset of this. But like Shashwat said, it's a very small factor. It's not a huge exposure. Even compared to Manappuram, this is much smaller. So I would not worry about this excessively as a value investor. And in the future, RBI, once it starts cutting rates, IndusInd will benefit from the rate cuts and it will do even more stellar returns will start coming again. It's a matter of time. Like Shashwat said, the FIIs have started the year with a 42% holding in IndusInd, which has dropped down to already 34. I'm sure by the time October is over, it'll be well below 34. Well, the DIIs in India have increased their positions in IndusInd from around 28. Already they've crossed 34. But I'm sure by the time October is over, DIIs would have bought into IndusInd even more. So that gives you the confidence the way it's moving. So today's pressure might be purely from the FIIs because they don't see the earnings for them the way they want in the short term. So and they don't see the growth in it. So they decide to get rid of it, is what I feel. I don't think the DIs would be getting rid of it as much as the FIs today. So that gives you clear context on what to do. If you have the stomach to see, it might even go down to 900. I don't know. Its book value is 807. So if you can stomach it, then keep sipping at it. My advice would be don't get exuberant. Just because you saw it drop 15%, don't go put 1 lakh into it. Consider it in different coffee ranges. And if you consider it at 10% for the day, then stop it. Don't immediately get triggered again at 15% and start considering it again. Then get stuck in another loop when you see it 19, 18% down and then consider it again. Before you know it, you have had 3 square meals when you're only supposed to have one. So be careful. That's my only fear, that we have people in our group who are very enthusiastic. They either go from one extreme where they're panicking or they go to the other extreme where they get very exuberant. Like Mr. Market, what we discuss, some of us do behave like that, so be careful of that.
Yeah, I just want to add on by saying that things could get a lot worse from where they are. We are not someone who can predict the future, and it seems that people at IndusInd also can't predict the future, which is why they have such a big buffer. The point here is that no one can see the future, but we do know that it's always good to be prepared about the future, which is what IndusInd is trying to do. And as for us at home, things could get a lot worse. The share price could dip below book value, as it has before with IndusInd. It's not that IndusInd's stock price has not dipped below book value. It has done it before. It has gone up after that, but it has gone down before that. So for those watching, if this is something you won't be able to stomach, maybe even for 5 years, let's say microfinance doesn't recover, the bottom class of India is still struggling, and if the consumer segment doesn't recover, IndusInd could be performing shoddily for, let's say, a set of years at worst case. If you can't stomach this, then I would suggest that you look at stocks which are doing much better and which have a more steady future. However, given what information we have at hand right now, I don't see anything fundamentally wrong with what IndusInd is doing. I, in fact, think that they're being quite prudent with what they're doing, as far as I can tell. Although things
Yeah,
do change, and we have to account for new information when things do come out.
correct. And if you even compare to banks like IDFC, IndusInd now looks far more attractive than our usual considerations, what we take into account. So keep all that in mind. Anything else you want to add, Shashwat?
Oh, yeah, one more thing. The links for the earnings call, as well as the links for the investor presentation for this quarter, is down in the description below. Please do check it out. Please do read the report, and please do watch the earnings call, because a lot of you will get important information about what's going on inside IndusInd. Yeah.
So thanks for watching the video as always. And me and Shashwat are very happy that you were able to join us, and we hopefully gave you some clarity on what's happening in IndusInd and if you should be considering it or not. Like I said and Shashwat said, do get a financial advisor, a SEBI registered one, that too. We're not financial advisors. We're not asking you to buy IndusInd or sell IndusInd or do anything of that sort. All we're doing here is giving some information to you guys for you to take into consideration. And before you do anything, do consult your financial advisor before you do this. Thanks for watching the video again, and me and Shashwat will see you again soon. Thank you.
Thank you. Hey guys, that my uncles VinodSrinivasan, Anand Srinivasan, and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for the Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.